Welcome to Broke Daddy Investments. Today is June 20, 2020. Okay, we're going to be going over our stash account. This is going to be a longer video because we're trying to plan out the next month based off of our holdings. Let's go over our current positions. At one point, we had increased our positions, thinking that the markets were going to go up. Well, the markets didn't go as we planned. No big deal. We're just regrouping right now. Into it. The current price is $286. Right now, we have a negative 1% return. The 12-month forecast for Intuit is $303, which is like a 6% upside. And then if you look at the charts, it's above its a 20-day moving average, so we might give it a little bit more time before we sell that one. Canadian National Railway, current price is $87.45. We currently have a minus 2.7% return on it. 1 year forecast is $119, which is 36% to the upside, and it currently pays a 2% dividend, so that is above its 20-day moving average. We don't have to do anything with that as of yet. Toronto Dominion Bank, the current stock price is $45.25. We currently have a minus 1.3% return. 12-month forecast for it is $85, which is like 88% to the upside. It is above its 20-day moving average, and it pays a 5% yearly dividend. British American Tobacco, the current stock price is $39.17. We currently have a minus 1% return. 12-month forecast is $60.48, which is 54% higher than the current price. It's not above its 20-day moving average, so we'll wait to see if it gets down to its 50-day moving average. If it does, we'll add to it, maybe twice our current position. If it goes down to its 200-day moving average, we'll add 4 times what we added the last time. And the good thing about it is it pays a 6.7% yearly dividend. CVS has a current stock price of $64.50. Our current return is minus 0.6%. 12-month forecast is $79, which is 22.5% higher than now. 20-day moving average, price is above 20-day moving average, and it currently pays a 3.1% dividend per year. Altria, the current stock price is $40.68. We currently have a minus 1% return on it. 12-month forecast is $50 for the stock price, which is 23% higher than now. It is above its 20-day moving average, and it pays an 8.1% yearly dividend. Philip Morris, current stock price is $72.26. We currently have a minus 3% return. The 12-month forecast is $85.50, which is 19% higher than where we currently are. It is not above its 20-day moving average, so we'll wait to see if it drops down to its 50-day moving average. If it does, we'll add twice our current position. If it falls further to its 200-day moving average, we'll add 4 times the amount we added at the 50-day moving average. Philip Morris currently pays a 6.3% yearly dividend. Newmont Gold Corp. Current stock price is $56.97. We're currently about flat on it. 12-month forecast for the stock is up to $73, which is 28% higher than we currently are. It's not above its 20-day moving average. So if it gets down to its 50-day moving average, we'll add twice our current position. If it gets down to its 200-day moving average, we'll add 4 times the amount we added our 50-day moving average. It currently pays a 1.8% yearly dividend. Royal Bank of Canada, we're currently up almost 1%. Current stock price is $68. 12-month forecast for the stock is $109. That's 60% higher than we currently are. It is above its 20-day moving average, and it currently pays a 4.6% yearly dividend. Brookfield Asset Management, current stock price $34.08. We currently have a minus 1.8% return on it. 12-month forecast is $42 for the stock. That's 23% higher than the current price. It is above its 20-day moving average. It currently pays a 1.4% dividend. Scorpio Tankers. Scorpio Tankers, current price is $14.90. We're about flat on that investment. The 12-month forecast is $27 for the stock. That's 81% higher than it currently is. It's not above its 20-day moving average. So if it's at its 50-day moving average, we're going to double our current position. If it's at its 200-day moving average, we're going to go 4 times what we would have done at the 50-day moving average. It currently pays a 2.6% dividend. Colossal China. Colossal China, current price is $105. We currently have a 1.5% return on it. The 12-month forecast on that is, I'm going to have to guess on it, it's between $200 and $300, which is 200 to 300% higher than we currently are. It's currently above its 20-day moving average, and it currently pays a 1.6% dividend. Canadian Pacific Railway, current price $254. Our current return is minus 1.2%. 12-month forecast for the stock is $3.55, which is 40% higher than we currently are. It currently is above its 20-day moving average, and it pays a 1% dividend yearly. Berkshire Hathaway. Berkshire Hathaway, current price is $179.7. We currently have a minus 1.56% return. 12-month forecast is $213 for the stock. That's 19% higher than we currently are. It doesn't pay any dividend, and it's currently below its 20-day moving average. So if it gets to its 50-day moving average, we'll double our current position. If it gets down to its 200-day moving average, we'll go 4 times what we did at the 50-day moving average. China Mobile, current price $34.96. We currently have a minus 1.75% return on it. 12-month forecast for the stock is $45.80. That's 31% higher than we currently are. It currently is above its 20-day moving average, and it currently pays a 6% yearly dividend. GlaxoSmithKline, current price $41.10. We currently have a minus 2.9% return on it. 12-month forecast for the stock is $47.43, which is 15% higher than we currently are. It is above its 20-day moving average. It pays a 4.9% yearly dividend. VMware, current price is $150.79. Our current return is 10%. 1-year forecast is $175 for the stock. That's 16% higher than we currently are. It is above its 20-day moving average. It currently doesn't pay any dividend. Southwest Airline. When we picked Southwest Airline last week, Only reason why we picked it was because they said they had enough money to last 2 years through these upcoming shutdowns or whatever else the economy is going to do. They said they had enough cash for 2 years worth of operating expenses. We haven't heard any other airlines talk about that, having that much cash, so we decided to take a gamble on them. Current stock price for Southwest Airlines is $34.54. Most of the airlines took a beating the last few days of last week. Our current return is minus 5.63%. 1 year forecast is $40.50. That's $17 or 17% higher than we currently are. So if it's down to its 50-day moving average, we'll double our position. If it gets down to its 200-day moving average, we'll quadruple the investment we put at its 50-day moving average. Bank of Nova Scotia, current price $42.05. Our current return is minus 2.73%. 12-month forecast is $68. That is 62% higher than we currently are. It's not above its 20-day moving average, so we have to look at it. If it gets down to its 50-day moving average, we'll double our position. If it gets down to its 200-day moving average, we'll quadruple the position that we put at the 50-day moving average. Bank of Nova Scotia currently pays a 6% dividend yearly. TK Tankers, current price $14.24. We're up about 0.42%. $12-month forecast for the stock is $27. That's about 90% higher than we are now. 90. It's currently not above its 20-day moving average. We have to look at it. If it's below its 50-day moving average, we're going to double it. And if it's below its 200-day moving average, we're going to quadruple our 50-day moving average investment. It currently pays no dividend. Medtronic, current price $93.90. We currently have a 1.5% return. 12-month forecast is $110. That's 17% higher than our current position. It's not above its 20-day moving average. So we have to look at the charts. If it gets down to its 50-day moving average, we'll double our current position. If it gets down to its 200-day moving average, we'll quadruple what we would have done at its 50-day moving average. It currently pays a yearly dividend of $2 or 2.5%. HSBC Holdings, current price $24.08. We currently have a 1.4% return. 12-month forecast $27.37 $27.37. That's 14% higher than we currently are. It's not above its 20-day moving average, and it currently doesn't pay any dividend. So we got to look at the charts. If it's below its 50-day moving average, we'll double our current position. If it gets down to its 200-day moving average, we'll quadruple our 50-day moving average position. Cigna current price $191.49. We're currently down 0.7%. 12-month forecast for Cigna, $246.50. That is 29% higher than we currently are. It's not above its 20-day moving average, and it doesn't pay any dividend. So if it gets down to its 50-day moving average, we will double our current position. If it gets down to its 200-day moving average, we will quadruple our 50-day moving average position. Bristol Myers is $56.35. We are down 1.2%. 12-month forecast is $73 for the stock. That's 30% higher than we currently are. It's not above its 20-day moving average. We'll look at the charts. If it's below its 50-day moving average, we will add twice as much to our current position. If it gets below its 200-day moving average, we will add 4 times the amount that we added at the 50-day moving average. It currently pays a 3.22% dividend, yearly dividend. Diamond Shipping DSSI, current price is $8.82. We're currently flat in that position. 12-month forecast is $19.60. That is 110% higher than we currently are. It currently doesn't pay any dividend, and it is below its 20-day moving average. So we'll look at the stock. If it's below its 50-day moving average, we'll add twice our position. If it gets below its 200-day moving average, we'll add 4 times to our 50-day moving average amount. There are some other ones that we might go back to. JD.com, current price $58.68. 12-month forecast $448. That's about 665% higher than we currently are. Naturally, it's above its 20-day moving average. And Alibaba current price is $220.64. I'm not sure the current return on it because we weren't invested in them, but we sold them for nice gains. 12-month forecast for Alibaba is $1,877. That is 750% higher than we currently are. Naturally, it's above its 20-day moving average. And then we'll just go from there. So we'll be mostly watching charts this week. The markets may be down most of the week, maybe even most of next week. So we'll be looking to add to positions at their 50-day moving averages. Any positions that are closer to 200-day moving averages, we'll add to those as well. Thank you for watching. Enjoy.